The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a quieter day in the graded oilseed markets on Tuesday. Maybe some interesting spread action being seen in quartered soybeans between old and new crops. Something for us to talk about. Also, another solid day higher in cattle futures, quieter outside markets. Is weather starting to play more of a role in this grain market trade in particular, as spring planting is getting ramped up in many areas? Let's talk about what we're seeing in the markets. Joining us for a conversation, Jacob Burks with agmarket.net is here with us today. Jacob, good to catch up with you again, buddy. Hope all is well in Wisconsin.
Hey, yeah, if the wind stops blowing, we might be in Tennessee before you know it, down there with you. It's been one of those weeks where it looks beautiful outside till you step out there and get blown around a little bit. But yeah, it's good to be here, good to be inside.
Yeah, no doubt. Well, even despite some of that wind and more, we were kind of chatting about this off air, and I think it's a good jumping off point for us today is that, you know, in areas where folks can get into the field, temperatures have cooperated, the rain has held off or things have dried out enough. I think we're getting some planting activity rolling here this week, and I think that's something that could be a key driver in these grain markets here, obviously over the next several weeks ahead, Jacob.
Yeah, just the conversation piece. I mean, the markets were moving today. We saw a lot of spread activity. So I'm on the phone talking to a lot of farmers. And it was amazing how many guys, we went ahead and got started or we're in the field planting now. Anywhere from some guys that we're talking to in Mississippi all the way up here to Grant County, Wisconsin. There's some guys rolling up here. The soil temperatures are at that questionable spot, but the forecast looks like there could be some rain into the weekend, and then beyond that, we start getting into some better better conditions to get the planting rolling. But again, you look at what this American producer can do and how fast it can go. I mean, there's guys I was talking to, Central Illinois, 75% done, Northwest Iowa, over 50% done in big operations too. It's like it's going, it goes fast. And man, it's just amazing what this technology will allow us to do.
Yeah, nationwide corn at 4% planted as of Monday afternoon, soybeans at 2%, but I got a feeling that number is going to jump up in a big way next week. And I wonder, with all the weather that we have seen, it really hasn't felt like it's been traded in these markets. And I would have to think, and I'll ask you, do we have any weather premium built into these grain markets right now, Jacob?
If you could say anything about the spreads, I think that what we saw last week, which is just a huge week there, all the information that came in, you almost forgot that there was a USDA report last week with the tariff news and all that information. I think a lot of what went into the last week was, oh gosh, we're tight in the balance sheet. Old crops taking off and running. And if anything, that we're seeing this spread kind of back off again today, where the July D spread's down to like 25 cents today. And I think if anything, that could be a little bit of weather premium going in. Are the forecasts going to keep people out? Or did we go too fast, too far? Maybe that's a little bit of the weather premium that's going in there. I mean, you've talked a lot about the weather. You've had Snodgrass on yours, and I know we know for a long time he's talked about the drought that is projected in the Western Corn Belt, and he's also looked at some wet springs, especially in the Eastern Corn Belt, and that's kind of what we've been seeing. So is there weather premium in there? I think there's uncertainty premium in here. As far as like if it's going to be too wet in the spring and then get the dryness in that's a lot to be said. I do think from the grain marketing standpoint, we have backed off a little bit to where we threw so much negative news at this market early. I mean, just hammered it with tariffs, hammered it with everything. And it was very resilient. And no matter what you look at, when you look at just corn specifically, you've got a balance sheet that's extremely tight. You got potential weather scares. We're not planted yet. You got the ideas of seeing some drought. And if that happens, then our balance sheet is too tight to take that at these prices.
Well, that's an awesome point. I think that speaks to how well corn has held up in the face of all the tariffs and the headline risk and more. As all that was happening, we saw soybeans, collapse big and things like that, all these big wide swings, yet corn didn't really do a whole lot. I think that might be a testament in itself to the tight balance sheet, Jacob.
Absolutely. I mean, you saw the stock market trade to 2,000 point range in the Dow. You saw the world's largest soybean buyers, have basically an embargo. If you look at it, I mean, 150, throw the number out there, whatever percent tariff you wanted to cast on each other. And yeah, that weighed on the beans significantly. But when you look at corn, you're talking about 2013 level, balance sheet, global stocks. I mean, it was tight. And so it just can't afford to have, these prices go any lower whenever we're not sure what we're going to have. And the safrinha crop, I mean, it looks good. We're going to be the cheapest corn right now too, domestically, until for a couple more months till we start seeing some of that safrinha corn roll in.
On the soybean side, obviously, we saw a rally the last couple of days. We gave some of that back on Tuesday, and then some spread action, intermarket spread action in soybeans as well, like corn on Tuesday. I just have to wonder, though. I mean, you look at 1020 to 1040 on the board, still don't feel like that's a price that's going to invite any late switches in acres. I wouldn't think here, Jacob. I just still feel like corn is kind of the king here, right?
Yeah, corn has done nothing to give away the acres, if you want to play it that way. If soybeans really done anything to buy acres? No. I mean, sometimes you have an acreage race, price battle, acreage battle on the way down too. And, it's who loses the least. And I don't think that's really happening here. We've stayed pretty stagnant. You also look at, and this is kind of goes beyond into a deeper conversation that I'm probably not qualified to talk about, but if these MFG payments come about, what's a producer going to plant? I mean, you have a 470 price in the insurance price if it was like it was last time, to where it's based off of the crop insurance number, doesn't disincentivize people to plant more corn if that's anything based off of that. So the acreage number, if nothing's working in works right now to make anybody change their mind. I think that with beans, to be aggressive marketing beans right now, I don't know that that's a wise decision either. There's just nothing that profitable. It's going to take something. It's going to take a surprise on that June 30th report where we said, oh, we only planted, 81 million acres, or we didn't get got even less acres planted than what we thought. So I think right at this point right now, we're not seeing anything. And does the weather help that? Does the longer we are delayed, maybe we plant some more beans as we go? I don't know. We'll have to wait and see. That'll all play out in the end.
I think with soybeans too, another thing for us to maybe keep in mind and touch on a little bit is that Argentina's announced some plans to incentivize farmers selling and exports. And, we wonder if bean meal and bean oil are going to hit the markets here fairly soon. And I think that's a storyline, just another storyline. Here we go again, more bearish weight thrown at the soybean market, Jacob.
I think, the bearish thing is coming in of people, our biggest competitors right now, incentivizing, more aggressive sales. I mean, the value of our dollar being down right now doesn't hurt us in that competitive realm. We're still not competitive. I think the most positive thing, I mean, I want to stay positive with you today, Justin. This is my goal, is the fact that I've heard a lot more about renewable fuel standards, a lot more of the biofuel industry mandating a basically double up of what we're going to use with soybean oil. And I think that right there, if nothing else, maybe some payments to come in to prop us up a little bit, but more so like increasing our demand. This is coming after we saw the third month in a row of the NOPA crush numbers being below estimates and lower. And so not a lot of positive things on what we're actually crushing right now, but the potential of seeing some more of these mandates go in, because that's what we have to have. We have to have a swipe of the pen right now to say, hey, we're going to use more of our domestic product here, and this is how we're going to do it.
And to that point, we see that there's a coalition of ag, biofuel, crude oil groups, working together to recommend to the EPA. And it sounds like that we could finally get some definitive answers on the RFS moving forward and things that you're talking about when it comes to, biofuels, biodiesel. Sounds like by Memorial Day, if not sooner. That's some of the latest chatter I'm hearing, Jacob. So we could get this in fairly short order.
And I think, it would be nice if we knew this going in. Maybe that would incentivize a more balanced planting approach. I think people, if anything, if you're looking at that bean field and you're like, man, I should switch to corn, but maybe they do come out and we do have something that props these prices up. that could be positive for it. And I think that from a throw agronomy out of the way and just if you're just focused on prices, it doesn't make any sense to plant beans at all. But from the agronomy side of it, and I hope that's what people are staying with mostly. That's typically what happens here in the United States. But if we can get those guys working together, and you have a coalition of people that are putting basically American agriculture first, and what we're going forward with, the time and effort that they've already spent in building this industry. And I think our administration understands that. I don't think it's something that they're out to fight about it. I think that they're conscious of that, and I think that's something that they'll work towards and have. The sooner the better.
Jacob Burks with agmarket.net's our guest analyst here today on Market Talk. I want to touch on the wheat market. Another moderately lower day there on Tuesday. It sounds like more rains in the forecast that are maybe having an impact. But I've had some people float to me the idea that maybe this wheat market is coiling up for a bullish rally of some sort, with the dollar getting lower, things of that nature, making us more competitive. I don't know. What's your view on this wheat complex right now overall, Jacob?
Jesse, I hope they're right. I mean, it could be coiling up. I mean, seasonally we tend to have a move here going into the summer, but usually it's because of bad weather or something like that. And then all of a sudden we're at this point now where we're starting to get better rains. Wheat just looks great from the guys that I've talked to across most of the wheat growing areas. Realistically, what I think would be the most beneficial is some type of EU trade agreement, and all these bilateral trade agreements. You don't know what's going on, in the back door, and I think that's something that could be in the works. I don't have any. If I'm looking at what could be the best outcome of potential new demand for the wheat market, I really think that's what it is. Because if we don't have some type of new agreement and new potential customer for our wheat, then we're looking into a supply situation. And right now, it just doesn't look like the supply disruption is going to happen.
I should ask you too. I know you work with a lot of producers in the South, the Delta, more. I mean, the cotton markets have not been friendly. And I know a lot of folks, cotton producers, rice producers, they're really struggling under the weight of this ag economy right now. I mean, what are some things you're watching on that side? And then I know we're trying to stay positive here today, so I don't want to turn you too negative, Jacob, but what are some things that you would say to folks like cotton producers right now as they're looking at these markets and having a tough time with them right now?
I mean, the beauty behind it, when you're getting a level that's not an attractive price that can make money, and that's where these guys are at. I mean, they got crops going in the ground because they have the equipment, because that's what the agronomy is saying that they need to do. And there's not a lot of optimistic approach out there. I mean, you're relying on an export market, and that's exactly what we're fighting. I do think that there will be some major, subsidies, and then there'll be some major things. I really believe that's where they'll start with some of those commodities that rely so heavily on exports. But right now, these are what options are made for. These are what some of these put strategies are made for. I mean, most of the rice guys, they're going to pull theirs. They're going to go to the co-op and pull it. But if they're independent marketers of their grain, I mean, this is what options are: give you a floor, give you that even worst case scenario, because that's a possibility that with these tariffs, and we saw crude oil go below zero. So there's opportunities that can still see downside movement here. But if you use those options, then you leave your top side open up. Or if you're aggressive and you're having to get the cash, at harvest time, then we got some strategies there that'll open up the top side. Understand what these options are. Understand how these tools work that put you in a more flexible position, because there's nothing attractive here. Same thing with the bean guy right now. I mean, there's just, when it's not profitable, it's hard to be aggressive.
Farm for profit, not for price. I know that's what you guys like to say at agmarket.net. Just got to be smart with your risk management in some of these cases. Let's go over to the livestock side.
Yeah.
Cattle, the last couple of days have really seen a nice rally back in futures. It really feels like livestock have been correlated with the stock market quite a bit here recently. But as you look at this cattle complex, did we get down to, say, a low enough price level that now we're starting to kind of bounce our way back here to the upside, Jacob?
The one thing you get too is you got a lot less cow slaughter too. So your cheaper products are having to be supplemented with the higher products that we have. You're not getting the importation of the cheaper beef like we had. That there were so many disruptions through the Mexican cattle problems and some of these other tariff situations that there's just a lot of factors going into this. We didn't have the complementary products building up like in the poultry and in the pigs. We didn't blast it with just an oversupply of that. So, if you're getting protein, the American producer, American consumer has proved that they will continue to buy our beef. And we've gotten comfortable over this 305, 310 area in the box beef. And so I think we did. I think with the clean out of some of the funds lowered the position down enough to where, okay, now that we've stabilized, now that the stock market's come back, now they're willing to re-enter that. I mean, I don't think the cycle's over. We're starting to buy into the building of the herd, this year. So when that happens, I mean, we're not throwing out extra beef right now. We have retained some of those heifers. And from a global standpoint, we're probably a year away from, if you look at all the producers of cattle, I mean, there's still, we're in a, probably next year going to be even lower supply of the cattle herd. And so we could have, these prices could stay around quite a bit, if and only if that our demand supports that, and that's the question right now. And we got a big scare last week. I mean, that was a huge move in the stock market. The recessionary terms came thrown back up everywhere, and I think that story's yet to be told, but it sure feels a lot more stable this week.
Well, and I have to think, with seeing such a big drop in cattle last week, like we did, and now starting to rally back a bit, I think it calls back to what you mentioned earlier, options, why they're such a good tool, or just risk management in general here for cattle folks. I mean, I have to think that might have been a catalyst, some of that big drop last week and the week before, to get some risk management done if you haven't done so already.
Well, I think you got to lay that out. And when you look at risk management, you got a good product in the LRP. If nothing else, I mean, it's a good insurance product. It's not as flexible. It's not as movable. If you have the both, that's even the best. You have your LRP on, and then you have the options to create some flexibility around that. But to own a live animal right now and not have some type of price risk management at these type of levels, excuse me, I think that's not always the best business decision. And I think there's enough tools out there now to where, if in case something happens, like the stock market falling down, in case the any type of problem, there's enough invested. You have enough invested in these cattle and hogs that having some type of plan in place that can get kicked into effect if these prices fall much further than where we did last week. I think it's very, very wise at this point.
How about the hog trade? It's felt a little bit like a follower to cattle here. Anything key you're tracking in lean hogs right now?
As far as tracking, no. I mean, we last week, everything, goes to last week. The recovery was pretty steep here this week. So I do feel like when you look at the gaps that we filled, everything that we're back up towards that 50% retracement of the big fall off in the hog market, I think it almost feels more of a technical trade right now, that we got some overhead resistance coming up. And so for that, I've taken a lot of my producers and said, okay, I'm still pretty friendly in the hog, just because of hog numbers and the lack of them there, and some of the disease pressure that we're still continuing to hear about. At the point where I'm like, okay, we've seen enough that this is an opportunity in this level to throw some floors under this and just have some type of risk management. We're getting to some major, the 200-day moving average, where it was support for so long. Now we're broke through that in that July contract. So, that's my opportunity right now to say, let's get some of this stuff protected.
Well, Jacob, good stuff as always. Any final thoughts you would share with folks here as we close out the show today?
Oh, no, I think we weathered a big storm. I had a junior guy that started with me this last week, and I'm like, hey, congratulations! You're probably one of the more historical weeks that we've seen in a long time. And so, as things stabilize, though, I think it's something to really focus back. Like, hey, that those type of moves in stock market and cattle and grains are real. And I think that's something that at any point in time we could see some type of swipe of the pen change the marketplace that we're in. So just have a plan in place and be ready for it.
Well, folks want to reach out for more information. You guys have a lot of great resources on the ag market website, don't you, Jacob?
Absolutely. Just go over there and look at our free trial. Take a trial run of what we got going on there, and we'd love to chat with you.
Agmarket.net for more information. Jacob Burks, always good to hear from you, friend. Thanks for joining us on the show today. Have a good one. Have a happy Easter. We'll talk to you again soon.
You too. Happy Easter. Thanks.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.